नमस्कार सभी को. This video, Partnership Fundamentals, we are continuing past adjustment. The topic is past adjustments. Under past adjustment topic 1, which I've already uploaded, that when a single adjustment entry is passed. This video I will be discussing about the second method of passing past adjustment entries. Here in the second method, a separate adjustment entries are passed. Now for separate adjustment entries, whatsoever error or omission committed in the question, for that we will pass separate journal entries, that is separate adjustment entries. Now for that we will open one new account, PLN adjustment account. So whatever entries are there, whatever errors and omissions are there will be passed debiting or crediting in PLN adjustment account. Now once this PLN adjustment account is opened, this account should be closed by transferring it to the partner's capital account. Now for more clarity, let's dig into the question. The question says the capital of A and B stood 2 lakh and 3 lakh respectively. Whenever this word respectively is given, always remember the first person, that is whosoever mentioned in the question. Like in this question, A is mentioned, so the first figure belongs to A and second figure belongs to the second partner whenever the word respectively is given. So A's capital is 2 lakh and B's capital is 3 lakh. After passing adjustment entry in respect of drawings and net profit for the year ended 31st March 2017. Now the 2 lakh and 3 lakh capital is your closing capital. How did I identify that this is a closing capital? Because if you read the question clearly, the year is also mentioned, 31st March 2017. That means the capital of A and B, 2 lakh and 3 lakh, is the closing capital, because 31st March 2017 is the closing date of the closing year. Now, it was found that interest on capital of 12% per annum was not taken into consideration while arriving the divisible profits of the year. The question says the errors is committed. The errors is that partners are not charged interest on capital. Therefore, interest on capital should be charged. So during 2016 and 17, A's drawing was 20,000 and B's drawing was 10,000. The net profit is 1,50,000. PSR is 3:2. Now pass adjustment entries. Question is asking. So clearly, this 1,50,000, the net profit which is given, is an incorrect profit. Why it is incorrect? Because interest on capital is not charged. So the question starts with the working note. Remember, here we do not be making adjustment entries. That adjustment entries is made when we follow the first method. The first method says when a single adjustment entry is passed, but this is the second method where separate journal entries are passed for every errors and commissions. And for that every errors and commission, you debit or credit PLN adjustment account. Now this new account, which is PLN adjustment account, is opened. This should be closed by transferring it to the partner's capital account. So the first working note is to calculate opening capital. Now why do I need to calculate opening capital? Because always remember, this is the thumb rule, interest on capital is always charged on opening capital, never on the closing capital. Therefore, the formula is closing capital plus drawings minus profit, that gives you opening capital. Interest on capital always charged on opening capital. So we'll draw three columns, particulars A and B, closing capital, which is 2 lakh and 3 lakh respectively, plus drawing, which is also mentioned in the question, 20,000 and 10,000. That gives me 2 lakh 20,000 and 3 lakh 10,000, minus profit. Profit is 1,50,000, which should be distributed in the ratio 3:2. So for A it becomes 1,50,000 into 3 upon 3 plus 2. Remember, in the denominator always the sum of the ratio is mentioned, and in the numerator the share of that particular partner is mentioned. Like for A, the share is 3 divided by 5, 3 plus 2. In the same manner, 1,50,000 into 2 upon 3 plus 2, 5, right? So this way the profit is 90,000 and 60,000. 90,000 and 60,000 is written in the bracket that represent that this amount should be deducted. Now this way I get 1,30,000 for A and 2,50,000 for B. 2,20,000 minus 90,000 is 1,30,000 and 3,10,000 minus 60,000 is 2,50,000. So hence I got the opening capital. Now let's calculate interest on capital, which is 12%. So 1,30,000 into 12 upon 100 and 2,50,000 into 12 upon 100, that gives you 15,600 and 30,000. This way the total interest on capital becomes 45,600. Now the second working note is to calculate correct profit. Now to calculate correct profit, this 1,50,000 is incorrect. Why it is incorrect? Because interest on capital is not charged. Now when we know the interest on capital amount, let's deduct this interest on capital from the net profit in order to calculate the correct profit. So 1,50,000 minus 45,600. This 45,600 is the addition of interest on capital of A and B, which means 15,000 plus 30,000. So this way I get 1,04,400. Now A's share is 1,04,400 into 3 upon 3 plus 2, right? And B's share is 1,04,400 into 2 upon 3 plus 2. This way A's share becomes 62,640 and B's share becomes 41,760. Now let's look into the journal entries. The date is 1st April and the year is 2017. So A's capital account debited, B's capital account debited to PL and adjustment account. So A's capital is 90,000 and B's capital is 60,000 to PL and adjustment account. This 90 and 60,000 is the profit, right? This is the incorrect profit which is cancelled. So for cancelling, A's capital and B's capital debited to PL and adjustment account. If you multiply 1,50,000 into 3 by 5, you will get 90,000. Similarly, 1,50,000 into 2 by 5, that gives you 60,000. So the old capital, which is 1,50,000, is distributed in the 3:2 ratio. That gives 90,000 and 60,000. Second entry is interest on capital, to A's capital to B's capital. So interest on capital, which we have already calculated in the working note number 1, 45,600 total, to A's capital 15,000 and to B's capital 30,000. Narration becomes being interest provided. Now third, P&L adjustment account debited to interest on capital account. This interest on capital is transferred to the P&L adjustment account with the entire amount 45,600 and 45,600. And the last entry, P&L adjustment account debited to A's capital to B's capital. The narration is being correct profit distributed, or you can say the P&L adjustment account has been closed by transferring into the partner's capital account. The amount is 62,640 and 41,760 as per the working note number 2. So the second method says do not make adjustment table, but here show working note wherever it is required and pass journal entries. Whatever the errors and commissioners made, transfer that to the PL and adjustment account, and after that PL and adjustment account is closed by transferring into the partner's capital account.